Well, good afternoon, and welcome to this podcast that we're doing. I'm here with Laura Moritz, who is a remarkable lender and able to assist financing of all types, VA and FHA and reverse mortgages and conventional and jumbo and all that kind of great stuff. And do you just do like properties in Florida, or can you lend in other states?
Actually, right now I'm licensed in New York, New Jersey, Connecticut, Pennsylvania, and Florida.
Oh my goodness. Well, so all of those states like kind of have one thing in common, right?
Well, I got an individual license in all those states.
Yeah, I'm just saying that all the people who are from those states, ultimately they end up where?
Oh, coming to Florida.
To Florida, right. So, and they may be buying investment properties and vacation properties and things of that nature. Well, today specifically we want to talk about reverse mortgages, and you have brought this to me, and we've had great conversations over reverse mortgages, and there's some misconceptions about reverse mortgages.
A lot of them.
So today we want to clarify the benefits of a reverse mortgage. So why don't you share with us the overall concept of what is a reverse mortgage, who qualifies for it, and how do they go about looking into that?
Okay.
Okay.
First of all, thank you for having me. I'm really happy that we can do this session. The material is so valuable and very often misunderstood. There's so many people who are feeling the financial stress of the modern economy, so there's a lot of folks that we can help. A reverse mortgage is a financial tool that homeowners who are 62 or older can use to access equity in their home. It's a home equity line of credit, but you don't have to income qualify for it. So a traditional home equity line of credit, like let's just say you walked into your regular bank, savings and loan, you have to, by federal law, qualify with your income to expense ratio, otherwise known as DTI, debt to income. And a lot of seniors, as you know, Tim, are on fixed income. And when you start to add up the cost of their insurance and their HOA and the cost of other fixed bills like cable, internet, things of that nature, they just don't have the income to qualify accessing the money that they need out of the equity in their home. So that's where a reverse mortgage can come in.
So in our market here, I've noted that a lot of people maybe bought a home 20, 30 years ago, and when they did, they were in their 40s, and now they've hit that magic number of 62, and a lot of people have been looking forward to Social Security benefits and Medicare, and that's their income. And their property that they bought 20 years ago has all that equity.
Tons of equity.
So if they were to try to get a mortgage, because of what you talked about with insurance is tripled in many cases, or to open a business, they could access that equity for a number of reasons.
Absolutely.
Right?
It's not necessarily just to pay your bills, although that's what I'm seeing a lot of the people who are coming to me for.
Okay. Like people with medical issues, maybe with their kids have the pain?
I had a couple recently who came to me and used a reverse mortgage to take the equity from their primary residence. They were in their 70s to help out their daughter who had medical problems and subsequently financial stress that resulted. So the parents want to help. I mean, ultimately, their daughter's going to get the inheritance of the equity in their property. So the parents are like, why should we wait until we're not here? Our daughter's struggling now at this moment in time. So there's a lot of ways that you could use the proceeds of the funds.
Well, how does that work with payments? Like if they don't have income, are they having to make monthly payments like a normal mortgage?
A forward mortgage you make payments on. A reverse mortgage, as abstract as it might sound, pays you.
Wow.
So you can get...
Wait a minute. I get a mortgage and I get a check?
That's right. So there's
cool.
3 different ways you can get the money. You can get it in a lump sum, you can get it in a monthly check, or you can get it in a credit line. So why this becomes very important? Well, let's just say that the fixed income of the husband is $3,500 and the wife is $2,000. So let's just say we have $5,500 of income and $7,000 a month of expenses with cost of food and insurance and everything. Where is that deficit being bridged? When you're sitting in a free and clear property, it makes a lot of sense to be able to let your equity work for you. So you can dig into your checkbook that the reverse mortgage provides, and you can bridge that $2,000 gap.
Wait a minute, I get a checkbook?
Yeah,
So I can write a check to whomever.
exactly.
Okay, it doesn't matter who I'm writing it. If I want to take a cruise or I want
You
to
could do
go to
whatever you
Vegas for
want.
the Super Bowl or whatever,
Go for it.
I can do that.
Exactly.
Oh, that's
And
awesome.
there's one really important thing. You know, financial planning is just that. It's planning. Like most people miss the planning part and they just kind of want to delve into, I want the money and I want the freedom, but there is planning involved. And what I would recommend is, let's just say, Tim, you have somebody who has a $500,000 house. And let's say we access $200,000 of the equity. Why not consider the possibility of buying a $200,000 life insurance policy
wow.
and funding it with that checkbook that I was just describing to you?
Yeah.
So now your estate value is exactly the same, actually a little bit more because you're spending the money and you replace the money with an insurance policy.
That's really smart.
So you're, yeah, it's
Yeah.
a big part of that planning picture that we really have.
So that's
to-
part of the conversation you would have with a client who comes to visit with you to talk about the reverse mortgage and how it works and the opportunities that are available. You help them maximize the use of that equity
That's right.
via the reverse mortgage.
Yes. Statistics say that 90% of seniors would prefer to age in place, meaning to stay in their home.
Wow.
And only 10% are financially or logistically prepared to do that. A lot of times what seniors need are some capital improvements to the home in order for them to stay there, meaning we have to change the shower or add some handrails or reconfigure the space, which costs money that they don't have.
Yeah.
You know, there's a myriad of expenses and concerns that somebody potentially could have when considering the possibility of wanting to truly age in place.
Well, the person who bought their home 30 years ago, the roof is now needing to be replaced.
Absolutely.
And the cost of a typical home, a roof replacement is somewhere between $35,000 to $45,000.
Even more, I've heard.
Yeah, potentially more depending on the size of the house. So this would be an example where maybe they have $300,000 that they can access because of the equity and because of the reverse mortgage concept, but they only need, for at the moment, the amount of money for the replacing the roof.
That's correct.
So they would take the $60,000 or whatever it is, they would pay the roofer, and now they still have that access to that equity,
The remaining
however
equity.
they need it.
That's correct.
That's
And there's
okay.
no monthly payment.
That's really cool.
It's amazing how the program really can be a life-changing, game-changing program.
So what requirements does the borrower have in reference to maintaining the property? Do they need to pay their property taxes? Do they need to make sure that there's insurance, things of this nature?
Yes, the borrower will be responsible for paying their insurance and their taxes.
Okay.
So when they do qualify, the borrower, it's not income based, but they do need to have enough money to at least settle those bills.
Okay.
So there's no typical DTI, but there are some income requirements just to have enough that's adequate for the taxes. There's no credit score requirement
Wow.
because you're not making a payment, so they don't really have to look at your credit. It does have to be your primary residence.
Okay.
So that's important.
Yeah.
And you know, one of the really hot topics, as you know, because we had been talking about this, about the upcoming special assessments, right?
Oh my. Yeah.
So if you are thinking about getting a reverse mortgage on your building or your property, the time to do it is before the special assessment is adhered to your complex, because that
That's like
itself-
right now.
Yeah,
isn't it?
that,
Because
that's now.
there's like a deadline by the end of the year for that.
That's correct.
Correct?
Yes.
How long does it take from the moment that a client calls you and has that consultation with you to go through? What's the process?
Well, they have to go through an independent counseling. So because of the seniors, vulnerability, so to speak, the government has a third-party agency, AARP offers it. You can very often get it from a local community college. I provide my clients with a list of third-party networks where they can go and get the counseling. This is important. They don't want to have a salesperson, not that I'm a salesperson, but somebody who's involved as an originator to have any part of the initial consultation with the senior, because they want it to be totally unbiased. So that way they'll get a clear picture of all the ins and outs, the pros and cons. And from the time they get that certificate, I can pick up the file and have them closed and have money in hand in about 3 weeks, which is amazing. Very quick.
So less than 30 days.
Less than 30
So
days.
today is like February 5th or 6th, I think it is. So by the end of the month, I could have the equity out of my house in the different formats that you described.
That's right.
Oftentimes, the seniors have kids involved. Do you welcome the kids to be part of the conversation?
I prefer that the kids are part of the conversation because they don't really understand the intricacies of it. I've heard kids use words like equity stripping and
Oh, wow.
and it's not even close to being true. One thing that I'll say, I use the word non-recourse, and some may not know what that means, but from the time that the borrower or the senior passes, so let's just say they borrow the money at age 80 and at 95 years old they pass.
Yeah.
The estate has 1 year to sell the house
Wow.
and pay off the lien,
Wow.
or keep the house and pay off the lien. Like if, let's say the kids are like, that was my childhood home, I don't want
Right.
to sell it. No
Right.
one's forcing you to sell it. It's no different than any other lien that you have on your property.
That's fascinating. I have a client who is 78 and he just passed. And he has a home up in Sebastian, and his sister was wanting to move to Sebastian, but they need to get their home sold in order to move to Sebastian. So my understanding is she's now going to move into her brother's house, and then we're going to get her house sold
So she has the
so
equity.
that she can
in
then
hand.
pay off the mortgage that this particular client had, because it was his primary residence. And she's not 62, so she would need to, so that's where that could work.
That's
So
right.
that she would have, that this particular client had a reverse mortgage on his home, that mortgage doesn't have to be paid off for a year.
That's right.
Okay, fantastic.
Yeah.
So actually the payments, the cost of ownership, it's just taking away from it's added to the principal.
That's right.
Okay, so that's really good. So the cost that somebody has talked to me about, the cost of a reverse mortgage, how does that get paid for?
Well, the cost of reverse mortgage is very, again, misunderstood often,
Yeah.
because what you're paying a lot of in a reverse mortgage
Yeah.
is per diem upfront prepaid interest.
Okay,
Because unlike a regular mortgage where you're making a payment and you're incurring the interest expense and paying it with each payment, a reverse mortgage, they're adding the interest
Yeah.
to the top of the principal loan balance, which is a cost.
okay,
Now let's just say that this is all done, and this is getting technical, but it's something that everyone needs to understand, that there's an actuarial equation. The older you are, the more of a percentage of the equity they're going to give to you, right?
wow, okay.
So
Why is that?
because they don't expect that you're going to be
I
around.
see. So their risk is less.
That's
Is that the
right.
deal? So the less the risk, the
Well, they're going to give you a bigger chunk of it because they don't expect that you're going to be around as long. So
Okay.
if you took the loan at 62, every single year, the principal balance of the loan goes up. They have an implied, I don't know what the word
there's
is.
a calculation for
A
it.
calculation that is actually not a correct, and it probably shouldn't be in there, but they
I see.
assume that the real estate value goes up every single year.
That's a good thing.
Yeah,
And-
I mean,
and-
that's an
and-
assumption.
Historically, it has over long term.
Yes, but they assume it goes up every single year.
Yeah.
And with the increased property value and the fact that you've aged another year, your loan balance that they'll give you access to will go up every year.
Oh, okay.
So every year you get a little bit more money that's available to you
Okay.
on this line. Now, included in that is the upfront principal. So let's just, upfront interest. So let's just assume that based on the original calculations, they assumed that you were going to live till 92. Okay, and let's say that I hope I live to 102.
Holy moly!
Not that far away. So, and let's say you only make it to 80.
Okay.
Okay, there's 12 years of prepaid interest that you're going to get a credit from the principal balance.
Oh.
You see what I'm saying?
I do, yeah.
It was stacked onto what they had assumed your life expectancy. They have to base the model on something.
Okay.
But you're never going to pay interest for time that you didn't have the money.
Okay.
So if the assumption was based on the fact that they expect you're going to live till 92 and you only make it till 80, you're going to have a 12-year interest credit removed from your principal balance.
So with all the artificial intelligence and technology that we have, there are insurance companies that have a way that they calculate the average life expectancy of a male and or female. Is that part of that, how they calculate that type of thing? I mean, that's real technical, but there's a formula that they use.
There's a deep algorithm where I have to put in your birthday and where you live. I mean, all of where we live actually comes into play with what our life expectancy is. And guess what? In Florida, I think our life expectancy is even higher because we're happy.
That's for happy is good.
Right?
Well, I am really happy, speaking of happy.
Speaking of happy.
Had this conversation because there are a lot of misunderstandings of a reverse mortgage, and today you certainly clarified the many benefits of getting a reverse mortgage. What do I do? What does a person do to connect with you, Laura, to look into this opportunity further?
Well, I am giving you my direct cell phone number. It's 845-222-8270. Call me, text me. I make myself so available, as you know.
Yeah.
7 days a week. If you can't sleep at night because you're worried about money, like it's a really, really pressing time financially for a lot of people. So I have a burning desire to try to help as many people as I can not feel the stress that they've been feeling about not being able to make ends meet.
I've seen so many reviews of your clients and how you have changed their lives. And so if you would again repeat the phone number so that anyone watching today would be able to make contact with you, because it's such a great opportunity.
Thank you, Tim. It's Laura Moritz at Classic Mortgage, 845-222-8270. And you can email me at lmoritz, MORITZ, at classicllc.com. And I'll have my contact information at the end of the presentation as well.
Wow, that's a class act. And thank you for taking time to bring clarity to this very important topic.
Thank you, Tim.
My pleasure. I'm Tim Kinsler. I'm with Keller Williams Realty, 561-573-0557. We thank you and we look forward to seeing you on our next podcast.